Good morning, everybody. My name is Mike Kennelly. I work at PwC in the CIO advisory practice within financial services. Previously, I worked for quite a long time with the Royal Bank of Scotland. And before that, I spent a number of years developing distributed services in a software company based on technologies like the Corba, object brokers, message queuing systems. And for me, that's the kind of birthplace of all of this technology. Came from that period. Does anybody recognize the name Iona Technologies? So Iona Technologies is, for me, one of the four founders of the technology that we see today. Interestingly enough, at that time, I spent quite a lot of time working with companies, helping them re-engineer their legacy systems with that technology, building wrappers for their data sets and helping them move away from the monolithic applications that they have. We're still doing it today. And this technology, I think, has a serious role to play in helping re-engineer legacy systems, especially in the large financial services banks today. Over the last 18 months, there's been a lot of discussion about PSD2 and what PSD2 might do or might not do to banks. And I think we understand all of that pretty well. And most of my clients today already have PSD2 projects up and running with the aim to become compliant by 2018. But over the last 6 months, clients have been asking us quite a lot more about, well, what is the opportunity here? Are we missing something by just focusing on the compliance side of PSD2? And open banking as a phrase has emerged over the last 12 months. And you're getting a lot of questions like, well, what is open banking actually? And how should banks respond? And what changes the banks need to make? So it's into that space that I want to focus my presentation this morning. Before I do that, though, I want to just share with you my vision of what open banking actually is. So for me, open banking is a much wider scope than PSD2, and I think we've been talking about this over the last 24 hours. But it's about bringing together the financial services resources much wider than the PSD2 data sets, plus the regulatory compliant infrastructure the financial services have. Being able to monetize that, being able to mash that together with other data sources outside of banking, and bringing all that together through a platform to be able to deliver financial services in a new way. And traditional banks will play a part here. Traditional banks will play a part in all aspects of that model. I see no reason why they won't be able to do that. It's about consuming APIs as well as providing APIs. And consuming APIs for some of the larger banks may actually play a bigger part in open banking than actually exposing APIs. And I'll come back to that as I go through. Now, everybody has seen pictures like this before. But when people ask me, well, what is open banking? I simply say to them, well, have a look at the API economy that's all around us today and is really successful. And for me, what's happening now is the API economy is coming to financial services. It's coming very late, but it's coming. And it's driven by a whole bunch of forces. We've talked about the regulatory challenge force that's out there with PSD2 and also what's happening in the UK. But that's just one of several forces that are in play here. And in fact, if that wasn't there, open banking, in my view, would still happen. There are some significant forces coming from the way customers want to engage with banks. They want to have a digital relationship with banks, whether that's through an app or if you're a corporate player, through an API directly. We all know about what's happening with FinTech, and I'll talk a little bit more about what we in PwC think the impact of FinTech will have. And of course, enabling technologies, cloud technology, the API technology, smartphone technology, other technologies that are coming as well, blockchain technologies, for example. There are also this slide's a bit out of date, actually, because, of course, banks also need to reduce costs, especially IT costs. And the ability to consume APIs, in my view, plays into the ability for banks to help them reduce their IT costs. The other issue banks have that APIs can help with is the image banks have. Banks have, unfortunately, a very poor image at the moment. They've come out of the financial crash with a very bad reputation. Customers don't trust them. And APIs and this open banking proposition provides an opportunity for banks to re-engage with customers in a different way and regain that trust. And it's an important enabler. APIs can be an important enabler for that and open banking. So you've all seen these pictures before. The open API economy is out there, is thriving. Much of the well-known brands that we're all aware of are all running API programs. Now, the insight that I would make here is that we all still know the brands. These brands are well-known. Because they've become platforms doesn't mean that they've undermined their brand. Their brands are really strong. So I've heard a lot of conversations about banking brands disappearing. I don't agree with that. I think if it's done correctly and done efficiently, and the model that is being established in the open API economy, the brands can become even stronger. The brands that will disappear, in my view, are the brands that don't embrace open banking. We had yesterday, we saw the Sears versus Amazon example. They are the brands that may well disappear. We know that there are some early adopters in the financial sector already, and of course, the FinTech community are completely embracing APIs as a means of doing business. There's lots of traffic happening here, and these are some out-of-date figures, actually, but I know that Twitter is dealing with over 15 billion API transactions per day. So I don't know if anybody from the bank knows, from banks today, know how many transactions are coming through from your own app today, but there's nowhere near that number. If you push the dial down maybe 10 years, how many transactions will be coming in from this world into banks? It's significantly different than today. So I just put these numbers up here just to remind ourselves that actually there's a lot of change that is likely to come down the line here for banks. I looked at the programmable web. Everybody probably aware of this repository. It's just one of very many repositories, but I looked at it to understand what the growth rate of APIs in the financial services sector has been over the last 2 or 3 years. And it's dramatic in that the majority of the APIs in this repository for financial services have appeared over the last 3 years. And in fact, if you add payments to banking and financial services, they make up now the most significant part of that single repository. There are lots of repositories for APIs out there, and there are lots more marketplaces emerging, but it just gives us a little bit of an insight in terms of what's been happening. Now, lots of people ask me about the technology. For me, the technology is already there. It's well proven, so technology is not going to be an issue here. And many of the players that are sponsoring the event and many of these brands you well know. However, standards in the PSD2 arena are important. The ability to, if we're going into a domain where we're not going to have contracts with third parties, then we need to have standards. We're talking about payments and moving money. That needs to be done correctly. We need to have standards in that space. But actually, beyond the PSD2 community, I'm not sure we do need standards, and standards, as was said yesterday, shouldn't be a reason for stopping embracing open standards. We've got a lot of organizations in the UK and Europe looking at this, and this, to be honest, is a concern for me, because I think this is one of the areas that's going to take a little bit of time. Hopefully by next year, we'll have some clarity on this, but there are a lot of players involved. And wherever you have a lot of players involved in the financial sector, things don't always run as fast as people would like it to run. So there's a lot of players with a say in terms of what those standards should look like. But I must emphasize, standards should not be a reason why you should embrace open banking. Now, demand for open banking. So at PwC, we like our facts and figures, so we don't like to depend on opinion and speculation about, well, is there a real market out there for open banking in the financial services sector? So we've done 2 pieces of research this year. We did a European-wide survey on PSD2, and I'll share some of that information with you. We did a global FinTech survey as well to understand what impacts FinTech would have, what sectors of the business would be at risk. And we asked banks and FinTech, we asked banks what they thought about whether they would partner with FinTechs, what parts of their bank business was at risk. So I'm going to share some of that information with you. So there's lots of figures on this slide. This survey is available on the PwC website if you want to use it. But there's a couple of figures that I just want to highlight here. So we spoke to over 1,000 customers across Europe, and we had over 30 European banks involved in the survey. So one of the things that I think is interesting here that 34% of consumers who do not use financial services apps today are going to look to use them post PSD2. And this is driven by the improved security model coming down with PSD2. So we know that sharing your credentials, your banking credentials with an app, is hindering the aggregator market. That constraint disappears. So we anticipate a significant increase in the number of customers who are prepared to use those aggregator apps post PSD2. 44% of customers who are not using their smartphones for payments at the moment are going to consider using their apps for payments post PSD2. Again, security, because of the stronger security model emerging. On the banking side, 88% of banks said it would have impact on their business. No idea what the other 12% think they're doing, but that's a big number. And I think this is an interesting number as well, that 64% of the banks that we talk to intend to partner with third parties here. And that's a significant move from where we were this time last year. So as I said, there's quite a lot of more information behind that slide. The next time you're doing a presentation to the C-suite, please use that. Knock yourself out with all the numbers that are in there. Now, who else is gearing up to actually access resources? So we talked about FinTech before, but for me, it goes way beyond the FinTech communities that we recognize today and those that are registered as FinTech communities as such. Lifestyle providers are, in my view, will also play a role here. And there's an opportunity, obviously, for banks to push their brand, their products and services through to pervasive apps in social media environments, and in whatever pervasive apps exist in any of the industry sectors. There's an opportunity for banks to partner and get their brand embedded in those context-based apps where customers want to do something of value to them, not engaging on a financial services basis. But also there's a significant number of technology providers out there who are now turning their products into API-based, SaaS-based models. And in terms of being able to add value to banks, there is significant value, I think, that will emerge here for banks. Banks need to reduce the cost of their platforms. Now, they have 2 ways of doing this. They can start to think about an API internal program and re-engineer the apps from the inside out. But my view would be being a veteran of managing large systems, architectures within the bank for 20 years, that's a swamp. You start putting your energies into re-engineering your legacy environment from the inside out, you're going to run out of energy pretty quick. There is an opportunity, though, to strategically select APIs from outside of the organization and plug those into your legacy environment. KYC, ID management, data and analytics, customer management, all of these platforms are going to be available to be consumed through an API. There's a huge opportunity here for banks to start taking cost out of their IT platform. So as I said earlier, we've also done a FinTech survey. This is a global FinTech survey. And I've just taken a couple of pieces of data from that survey. Again, that's available in the PwC website. So what we were trying to understand here was what do the banks feel about integrating and partnering with the fintech community, and in what areas of their business do they think they could get some value? And interestingly enough, cost reduction, from 73% of banks think that they can help with cost reduction. But obviously there are pretty high numbers in terms of differentiation and customer retention as well. 75% think they will do something with fintechs in the customer engagement layer. But this is a significant move toward seeing the fintech community as a threat to seeing them as an opportunity and a partner to deliver services going forward. Now, and this is fundamental, I think, to the success of open banking. Now, what revenue opportunities exist and what business models are emerging? So there are very different ways that open banking can generate revenue. Direct revenue through monetizing either the data or the infrastructure. So I'm working with a number of clients at the moment who are thinking about monetizing their payments platforms because third-party payment providers need to be able to access payment infrastructure. Some of the big players can do that. PayPal, they have their own banking license, they've got access to it. They will meet the accreditation level easily. But within PSD2, just so I don't forget this, there's a requirement for third-party payment providers to be accredited. This means that they're going to have to be concerned about KYC, they're going to have to be concerned about capital, liquidity management, and regulation associated with the business that they're in. Probably that means that a number of existing players will drop out of the market, but others will want to have a leg up, and they'll do that by partnering with players who already have compliance, who understand the compliance, who understand what it means to operate a compliant environment. So already we're seeing relationships between payment providers and banks starting to emerge. So we had an announcement last week between TransferWise and Raphael Bank. So I anticipate those players will be very interested in strategic partnerships with players who already have a compliant platform. Monetizing data, there's no question that there's banking data, reference data the banks have that they can monetize. Direct revenue as well, for me, cost saving is a big opportunity here. So consuming APIs into your value chain from outside the bank. You don't have to be concerned about putting your data in cloud. You can bring the data back again. The data doesn't have to be at rest. Many of the interesting APIs that are out there, you can just use the API and bring the data back in. But of course, most banks are also thinking now about and getting more confident about using cloud anyway. Distribution channel, marketing channels. There's a project going on at the moment with CMA to establish the comparison websites. I built a comparison website for Tesco when I was an RBS. Insurance industries have done well in terms of marketing their products through aggregators over time. There's no reason why the banks should see this as a threat. This is an opportunity to market your product. But of course, you can market your product through many of the other apps that are out there. Third-party integration I've listed at the bottom. This is, for me, probably the most important piece of open banking. I was going home last night and I read in the Standard there's an announcement of a very interesting app on the British Airways platform. I don't know if you saw it in the Standard last night. So the idea here is you won't have to check in your bags at the airport anymore. You'll check in at home. Put your bags. You check your bags in at home. You'll check your bags in at the hotel. You don't have to take your bags with you anyway. I thought, wow, what innovation! That's a great idea. So this is a third party that's come to British Airways and said, why don't we do this? And now they've launched that app yesterday. So this is about innovation. This is not about APIs. This is about solving problems that you never thought you could solve with third parties. So that's a really good example of using your platform to innovate in a very interesting way. And third-party innovation is key to this. And one of the reasons, I think, that it is key, well, I'll come on to it later, I think. The survey that we did, PwC survey, we also asked banks what type of business models they saw emerging. So we identified 6 models. Most of these, I think, have been discussed over the last couple of days. Quite a lot of banks are thinking about their own app store. So I think this is interesting, and I think there's no reason why they shouldn't do that. But if you think about the really successful open banking platforms, how many apps are sitting on top of those platforms? There's more than 5. There's more than 10. In some cases, there are thousands of apps. So let me just pause on that for a minute. So banks today have one app, most of them. They run one app. There's quite a lot of people involved to build it, support it, keep it running. If you want to be really successful in this space, I anticipate that there will be hundreds of apps running against your platform. It's not conceivable for banks to be able to actually build that amount of software and support it. It's not even conceivable that you could come up with the ideas that are going to be successful against your platform. So if your strategy is based on, I'm going to own this space, I'm going to build all the apps myself, I don't think you're going to be really successful. You'll be marginally successful, but all that will happen is your team and your support costs for that IT will just grow and grow and grow and grow, and you're going to isolate yourself from the innovation, like I saw last night with British Airways. It's about innovation, and that means a different way of working. Yes, this will happen, but I think you have to work across, and you have to be open to operating with all of these models to be successful. Bringing them all together, we see a scenario whereby you'll have a financial hub that will be bespoke to a sector. It will be bespoke to a business sector. And in fact, there's no reason why you wouldn't see the Internet of Things being connected to this. So we see driverless cars coming along. A driverless car is going to have to charge for taking a customer from A to B, and there's no reason why those objects wouldn't be connected to this financial hub. Of course, underneath all of this, there's a whole lot of things happening. You've got the existing resources that banks have. You've got the new fintech players coming in here behind this. There's API relationships across the back here, and obviously to lifestyle providers as well. So down the line, this is the type of vision that I think we'll see how financial services will be delivered. One of my favorite examples about when I talk to people about open banking is about my local pub. So my local pub's called the King's Head. So I go into the King's Head and I buy around for my friends, and everybody has a different drink. Most everybody has a different drink. But the King's Head as a brand is well established. It isn't disappearing. But as a platform, it allows you access to all sorts of different drinks. Can you imagine if you went into the King's Head every day and all you could get was the King's Head home brew? It'd be a boring place to be. So there's no reason that you have to be able to embrace third-party apps. You're not going to be successful in this space without that. You have to be able to move away from the idea that you have ownership of the innovation here. And this is an important message because I haven't been in banks for 20 years. I kind of know how banks think. And I know that they will look to try to take ownership of this. You have to release the ownership. You have to get away from the idea that you can do it all yourselves. Right. So partner-developer networks and API-first development strategies. So there are three things that I think are really important. So the most important thing, and this is the most important slide that I have, is that you have to think outside in. You've got to let go. You've got to let go of control of the innovation. You haven't got the capacity to do it, and if you try to do it, you're going to actually miss an opportunity to come up with the innovative ideas that are out there about how people want to engage with financial services. A philosophy that says build it and they will come, in my view, is going to fail. On the other side of this slide, I've got an object here with two elements of the solution that I think are, you can't do one without the other. To try to run an API-first program and start to get ready to be able to expose APIs without working through a partner developing here is not the right answer. First of all, to determine what APIs you need some business requirements, and they come from that community. You don't try to second guess what APIs you should be building. Get that community to help you to develop the right APIs. Now, I call it a partner-developer ecosystem, not just a developer ecosystem, because this is a banking environment. This is a serious business of moving money around, and you have serious responsibilities to your customers. So it's really important to select partners that you're going to work with and establish proper business relationships with them. It's not a relationship around an API. It's a relationship around solving a business problem that might actually go well beyond just the use of an API between the two parties. But you need to think about selecting the partners that are aligned well to the business objectives that you have, that have something immediately and there to offer. I put this slide back up because these players are already there. You don't have to go out and market make here. They're already in place. And I have only got a fraction of the brands up there that I think will play a role here. There are three things that I think are important about creating a partner developer network. Two of them, banks are pretty good at, because banks are good at helping businesses grow. They understand what it means to be successful. So substance, the partner developer needs to achieve something important to them. Otherwise, there's no relationship. There's no basis for a relationship. And ideally, you help that partner grow, and you grow with that partner. So that's standard practice. However, you also need a bit of charm in this space. And that's probably going to be a bit of a challenge in the banking world. Not that the banks don't have charm, but there's a cultural clash that will emerge when you go out and talk to fintechs and try to get that fintech to work with a large bank. Now, the FinTech report that we did earlier this year identified the challenges of, from a fintech's perspective and a banking perspective, of working together. And cultural change and behavior were top of the list. It's really important that you find a way of aligning, where possible, to the culture of your partner developer. And I'll come back to that in terms of how you might think about doing that. But it is the number one challenge that has hindered small fintech companies working with big, large monolithics like big banks are. But it's already happening. So large banks are already partnering with fintech. This is just a snapshot, but it's starting to happen already. And this is, in my view, will become the norm. The slower you are getting off the marks on this, the fewer and fewer partnerships that will be available to you, because they'll all be snapped up. They'll all have relationships with banks, and it's important to get off the starting blocks with your development of your partner relationship. Now, I know I went to a number of hackathons over the last 12 or 18 months, and I think these are interesting, but you need to get to the next stage, and you need to get to a point where you can establish grown-up professional relationships with these fintech community. Now, the other side of the strategy is, okay, I'm a little bit behind time, so I'm going to just wrap up very quickly. Open API strategy is really important. And what does that mean? It means that every pound of investment that you're asked to make by your business, you should first ask, can I monetize this solution? Can I give an opportunity to my partner development network to help build this? We've seen over the challenge that for banks at the moment is that most banks are in what I call the SOA, the service-oriented architecture part of the model. They need to move up into the open IT side of the model. That's a big move. Co-creation is key to success here, and moving from that to an open IT environment is a big challenge, but one I think the banks need to start embracing. I'm going to wrap up with this slide. You need to think, I want to come back to the cultural impacts with working with fintechs. And you need to think about the open API layer, not just as a security layer between the internal organization and the external organization, but you could also see it as a cultural firewall that you could put up between what's happening internally and what you do with your open API program. I think it's really a big opportunity to start anew here for banks and to focus their energies on the partner development part of this equation in terms of putting your API platform in place. Doing something about re-engineering the traditional platform, I think there's scope to do work there, but you'll run out of energy and you'll get lost in the swamp. Okay. So key messages for me: learn from the open bank economy, get some knowledge from that community into your banks right now. Open banking innovation is the key here. Outside-in thinking must prevail. And focus on a strategic partnership relationship as a priority rather than the technology. Technology is easy. Get these partners on board, get people on trains, planes, and automobiles, and start talking to third parties that can add real value. Okay, thank you.
Thank you.